Hi traders, today's video is how to trade the double top chart pattern for excellent risk reward opportunities. And I'm going to cover the following topics, and they are double top price pattern, the anatomy of a double top, entry, stop loss and target, and we'll go through some chart examples. Now if you're looking for a great risk to reward trading pattern, then this video is for you. Stay with me to the end as I show you step by step how to trade the double top pattern. Introducing myself, my name is Duncan Cooper. I'm a full-time trader and the senior market strategist and trading mentor at ACY Securities. Okay, let's get into the first topic. Okay, let's discuss the double top price pattern. Now it can be both a continuation or a reversal price pattern. Price forms two equal swing highs. The swing low formed in the middle of the two swing highs can be lower or higher, and the price pattern is more effective when the swing low is a lower low. Alright, let's get into the anatomy of a double top price pattern. Alright traders, let's go through the anatomy of a double top price pattern. So here I have an uptrend coming up, higher bottom, higher swing low forming here to a higher swing high. So you have an uptrend, then we fall down, form a lower swing low, we come back up and rally all the way back up to the last swing high. So we end up with two equal swing highs. That's the double top just there, and then from that resistance level price declines strongly. So that's the perfect look of a double top, in that we have a lower swing low in between the two equal swing highs. Now as well, a double top can form when price is moving up, forms a swing high, pulls back, forms a higher swing low, and then price comes up and puts in an equal swing high before again forming a double top pattern and declining. Now as I said before, the pattern's more effective when the swing low in the middle is a lower swing low, but you can get a double top with a higher swing low in the middle. Let's now look at entry, stop loss and target. Okay traders, let's go through entry, stop loss and target. Now I like to trade this pattern on the daily or weekly chart in terms of finding the pattern. I might drop down to a lower time frame to get in, but I like to see the pattern identified on the weekly chart or the daily chart. And let's just talk about target before we get into stop loss and entry. The target, the height of the pattern, which is from the equal highs measured down to the swing low in the middle, the height of that projected underneath the swing low is the target for the pattern. Okay, so that does offer you the potential for a good risk to reward trade. Now what I like to do, once I've identified the pattern forming, I like to get in a trade setup within the first 50% of the move down from the high to the low. At worst, if I can get in within the first 25% of the move down, even better. So if you're getting in within the first 50%, that will give you a potential risk to reward for your trade of 1 to 3. If you can get in within the first 25% of the descent, then you have a potential risk to reward of 1 to 7, which would be ideal. So this is the zone where I'm looking to get in for my entry. My stop goes above the high, 5 to 10 pips above, and then I'm looking for my entry within that first 25% to 50% decline of the distance from high to low, and my target is the height of the pattern projected underneath the swing low all the way down here. So it does offer a great risk to reward, and often price will move further than the price pattern target. Alright, so with that in mind, let's now jump into my MT4 platform and have a look at some chart examples. Okay traders, I'm on my pound dollar daily chart, and I've just drawn in here a double top pattern that was formed back in time. We have two equal highs here, and there's a swing low just there. It is fractionally lower to the last one, which is there. We'll just draw it in terms of swings. It's moved up. It's come down to a fractional lower low. Comes up to an equal high. And then as we can see, price from that double top, we get obviously a significant decline from that level. So what I like to do, I've got my fib tool actually set up so it'll show me where the price target comes in. If I get my fib tool, so you've got my chart layouts, get the fib tool, drag it down from high to low. My fib tool is set up so I have a 200% marker here. It projects the height of the pattern below, and that 200% level is my double top price projection, okay, which is at 133.29. So I use that tool to give me the price projection. What I can also do with this tool is I like to get in within at least the 50% move down from that high to that low. So the fib tool actually shows me where the 50% point is, just here. Alright, so I also use that as a reference point so I can make sure I'm getting in so that I've got a good risk to reward. Now let me just take that fib off at the moment. I have a couple of ways of getting into a trade when I see a double top. What I like to do if I'm just using a day chart entry is, there's the candle that forms the high, is I just like to get in when price breaks the low of the candle that's forming the double top potentially. Alright, so if I get my drawing tool in here just to show you, my entry would be the break of that red candle low just here, 1 pip below. That would confirm for me that we have a double top just there, and then obviously I'm using my price target, double top price target, for a target down here. And if I just clean things off, a very simple way of coming up with a target, if you get your trend line tool and just draw a line from high to low here, once it's drawn, just then reposition it so that now sits underneath the low, and then that will give you your price projection for the double top pattern. Okay, that's one way of doing it. Of course, as I showed you before, I like to use the fib tool, so I'm just going to put that back on, and then I'm going to show you another way of how I get in. So I've just shown you how to get in on the day chart by just breaking the candlestick low. That would have come in round about the 50% decline from high to low, so that would have been just fine. But as well, if I drop down to the 4-hour chart, just scroll back to the area where the trade sets up. So here's the double top, 1, 2 tops there, there's the swing low. Now if you drop down to a 4-hour chart, what you'll see is that there'll be little swings within the 4-hour chart. So often what I wait for is price to have a decline, and then on the 4-hour chart I'll wait for a swing back up, like so. And what I'll often do is just get rid of that fib for the moment. I draw a fib from that final high down to the first decline intraday on the 4-hour chart, and then I look to sell a rally at the 62% or the 79% of that small swing. By doing that, I'm able to vastly improve my risk to reward when I'm targeting my double top price projection. Okay, so what you'll see is if I was going to enter here at the 79% retracement level, I'm just going to put a little line in there so I know where it is, and then just tidy everything back off. So just marked in where I could have gotten in on a 4-hour chart, selling a rally at the 79% level on that small swing. I'll go back to my daily chart. Put that fib back in just to show you that by dropping down to a 4-hour chart for an entry point, once you know that the double top's forming, I'm able to get in within the first 20% of the move down before price starts to collapse all the way down to your price projection. So if you can get in within the first 20%, then that will give you around about a 1 to 9 risk to reward, which is ideal. Alright, so that's how I like to get in. I can get it on the day chart by just trading the break of the candlestick low of the prior day when I think the double top's forming, or I can drop down to a lower time frame. Now what I want to show you with these double tops, I've actually got two highlighted here on the chart, is that often when you get a double top pattern forming, you can get a very substantial trend change. Of course, if you were getting in here and you just held the trade, you can see that price has moved down, or approximately 1200 pips down to this point. There was another double top over here, and getting in, that moved down to where it bottoms over 600 pips. So identifying these patterns on the day chart or even the weekly chart is going to show you where strong price reversals happen, and then gives you the opportunity of setting yourself up for a trade with the potential for an excellent risk to reward. Okay traders, hopefully you found this video helpful. Make sure you add the double top price pattern to your trading plan, and I look forward to seeing you in the next video. Now if you're interested in improving your trading, why not join me in my free beginner webinar series? You can register by using the link in the description below. All those that attend the webinars get full access to my own MT4 chart layouts and indicators. Okay traders, thanks for watching, and I look forward to seeing you in the next video.